I have the pleasure of moderating the last session of the day, and I'm really looking forward to introducing three really interesting companies. First up is our good friend Dan Wilton of First Mining Gold, and he's got the Springpole Project, another interesting exploration project up north as well. Dan, thank you so much for joining us here in Frankfurt.
Kai, it's a pleasure.
Good to see you.
Yeah, good to see you. Much appreciated. Okay, well, thank you everyone for being here. It's great to see such a full room of interested investors. And Kai, thanks very much for putting this on. It's a real pleasure. I'm Dan Wilton, the CEO of First Mining Gold. I'll make a few forward-looking statements in this presentation as we go through. First Mining is advancing two of the largest undeveloped gold projects in Canada. Our Springpole Gold Project is a large 5 million ounce feasibility stage and importantly advanced stage of permitting project with very robust economics located in northwestern Ontario. We're also moving forward our Duparquet Gold Project, which again, multi-million ounces right in the heart of the Abitibi Gold Belt with a very robust economic study we put out last year. And importantly, with these two large gold projects, you have exceptional leverage to the gold price moving forward. And we'll talk a bit about that because it's very important to understand. The company was founded by Keith Neumeyer, who's in the crowd here today. Thank you, Keith, for all of his wisdom and ongoing support of the company. Keith is our board chair and largest shareholder. One of the things that Keith and the team pulled together was a portfolio of assets that we've actually used to really help keep the company funded over the last 4 years. This portfolio of assets we've used to bring partners in. We've created royalties on these projects. We've sold these royalties. And all in all, have turned this portfolio into more than $60 million of cash over the last 5 years. That's really helped us move the company forward and helped to really try and minimize the share dilution that we've had. So sitting today with a little bit more than 1 billion shares outstanding, a market cap of around 150 million Canadian, and well funded. We've just completed a $15.5 million financing. So sitting with, at the end of the quarter, about $18 million on the balance sheet, and still significant value in some marketable securities from these other projects that we had. And the value of those joint venture interests in some of the other projects that we have, very significant. So we'll continue to look to potentially turn some of those into cash to help us monetize and keep well funded as we keep moving the project through these development stages. So shareholding base here is considerably long-standing, very supportive shareholders, a lot of people who have followed Keith for years and years. A few of our great shareholders in the crowd today, and we thank them for their ongoing support. And importantly, management and directors here own 4.4%. It doesn't look like a large number relative to some other companies, but important to understand that almost every share the management and directors owned has been purchased either through financings or bought in the market. Keith is buying shares in the market almost every month and continues to do so. So a real sign of management and board alignment with the shareholders, which I think is very important. So for gold development projects, the picture has never been more clear in the 30 years of my career. You have a gold price that's been exceptionally supportive. You now have the share prices of gold and silver producers, both large cap and mid cap, which have started responding to that. You see that with the GDX and the GDXJ lines there. And the bottom line on this chart is gold developers. And we are very clearly in that path. We're advancing these projects through major milestones, but we and a number of our peers have continued to suffer from challenging investor interest and challenging access to capital. So you're sitting today with the value of these gold developers at really all-time lows over the 30 years that I've been involved in financing mining companies. The fact that we and others, you can still buy very attractive late-stage projects for less than $10 an ounce in the ground is exceptional value. When what's really important on this list is actually the difference in valuation between where the developers are and where the producers are. And that gap, I don't think, has ever been this large. That gap always gets solved through the M&A market eventually, because producers are going to need to replace reserves. Producers, by and large, have not been reinvesting in their businesses, and they've not been having exploration success in order to be able to replenish reserves. So this sets up an environment where larger companies are really actively looking for projects. And if there's anywhere that they want to own projects particularly, it's really two jurisdictions. It's Canada and Australia. Large Canadian gold projects are the premier asset, the most highly sought after assets in the gold business. And we continue to see this. It's a really important fact. Almost every 5 million ounce gold project in Canada that has received its environmental assessment approvals over the last 5 to 10 years has been acquired or has been funded by a partner at valuations of $500 million or more. And we've got 2 5 million ounce plus projects in this company. So while we wring our hands and, as a lot of investors say, well, we haven't really seen that vibrant M&A market, the one place you've seen it is in companies buying projects in Canada. So that gives us some real confidence that as we advance these projects, these are strategically significant. And if you're a gold producer, you used to be awash in opportunities. There were 7 mines on the verge of development. You had your pick. You didn't need to be in a hurry. Well, you fast forward to today with all of these 7 projects, major projects that have been built or are in construction in Canada right now. If you're looking at what's available to build over the next 5 years, it gets to be a really, really short list. And if you then break this list down into which companies have advanced projects through permitting and who has a chance to have a project ready to build between now and 2030, there's maybe 3 projects on this list. So we've gone from this environment where there's been an abundance of projects to now where the development project is about to be the scarce asset in the gold sector. And we've got two of the best in Canada inside First Mining Gold. So what does that mean for investors? Very simply, with the existing technical studies that we have, remember these are advanced stage projects, very well drilled, very well understood geologic risk. You're not really taking exploration risk on these projects. Well studied, our Springpole project, we're about 90% done a feasibility study. But if you look just at our pre-feasibility study at Springpole, done in 2021 at a $1,600 gold price, and you look at our Duparquet project, which we put that study out last year at an $1,800 gold price, we think we have in excess of $1.80 per share of fundamental value really just from those 2 projects. Most companies with advanced stage projects like this historically have traded at kind of 0.4 to 0.6 times that fundamental value. Well, that's pretty exciting. You can see at a 14-cent share price, you've got, a lot of runway for appreciation. But here's where it gets really interesting, in that every $100 in the gold price is $250 million US of additional net present value off a base on those 2 studies that was $800 and $1,000 ago. So you go back to this chart and say, if you were to look at this at a $2,500 or $2,600 gold price, it's more than $5 a share of fundamental value, and you can buy our shares today in the market at 14 cents. So if this was something that we were talking about permitting milestones and major de-risking milestones that were still 10 years in the future, I could understand that. We're not. And that's where, it starts getting to this risk-reward idea that I'd like to leave you with, because our Springpole project, we believe, really is the next major gold project in Canada to get environmental assessment approval. We submitted our final environmental assessment report on Springpole 2 weeks ago and targeting that EA approval at the end of 2025. So it's about a year away. And so we like to go back to that valuation and say, if we have our environmental assessment approvals, almost finished a feasibility study of one of the largest undeveloped gold projects, very robust gold project. Our PFS showed after-tax NPV in excess of $1 billion, or just under $1 billion, at a $1,600 gold price, and very attractive cost profile. Definitely lowest quartile costs, and a project that, we think the basics of what's there are very, very attractive, mostly because it's one of very few projects in the world that can produce more than 300,000 ounces a year. So that puts it as a really distinct strategic asset when you look really around the world of projects that can be of this size. Located in a great place to develop a mine. We're 100 kilometers from Red Lake, Ontario, where they've been mining gold since the 1930s. Infrastructure in the area is good as well. Proximal access to grid power, and we have a road now within 18 kilometers of the project. So I won't dwell on the numbers on this chart, only to say that it really does speak to the low-cost development opportunity that this is, but it's a big project. Ultimately, when you're looking at that capital cost at Springpole, including some inflation since 2021, it's going to be somewhere between, we think, $900 million and $1 billion US to build. But look around the world at other projects that can produce this amount of gold. That's a very, very competitive capital efficiency. So the project itself, a large open pit, a tight footprint. And one of the things that we've dealt with forever as a perception challenge of this project was that the deposit sits under the bay of a lake. There was a time when this was a big risk. Over the last 14 years of work that we've done on this project, we are very confident that we've addressed the technical and the environmental risks that we can develop this project in a socially responsible and environmentally responsible fashion. And if anyone has any questions about that, we'd invite you to go to our website. Our newly published environmental assessment is on that website. It's 15,500 pages. So I welcome you to read it. And if you have any questions about whether or not we can complete this, I'll have that discussion with you after you've finished it, because it is really comprehensive. I've learned more about lake trout and caribou than I ever thought I would in the mining business, but it's an important part of what we do. Importantly on this permitting process, though, is that we've been actually in back and forth dialogue with the regulators since 2022. So we've already answered 1,900 comments and questions before we submitted the final EA. So I think we're in a very good position and have a very good degree of confidence that we get this project to that approval stage by the end of 2025. Still lots of interesting exploration upside at Springpole. In the interest of time, I won't spend too much time on this, but we just put out a news release this week talking about a potential eastern extension. The most important part there is that with some of the drilling, we're demonstrating that we're converting waste to ore, have potential to convert waste to ore in some of this pit that further lowers the strip ratio, makes it even more attractive. So lots of opportunity to continue to see exploration growth there, in addition to the 70,000 hectares of exploration ground that we have, really major scale, district scale exploration there. So I'll just talk in the remaining minute and a bit about our Duparquet project, of which we're equally excited, maybe more excited than Springpole. Again, on this project, 3.5 million ounces of measured and indicated resource, 2.5 million ounces of inferred, sitting right in the middle of the Abitibi Gold Belt in Quebec, one of the most sought after patches of ground in the mining industry. We're 50 kilometers from a smelter, Glencore's smelter in Rouyn-Noranda, that's been operating for 100 years. So this is the heart of Agnico Eagle territory, and we have one of the largest resources with a real bona fide mid-tier production profile from this project, looking at producing more than 200,000 ounces a year. And this is only scratching the surface of 2.5 million ounces out of the 6 million ounces that's at the project. Really one of the highest grade open pits in Canada remaining, so average grade of 1.4 grams, and very robust economics with, again, significant leverage to the gold price. But the real story at Duparquet is the exploration opportunity. An endowment where they mined 1.5 million ounces out of this from the 1930s to the 1950s. There's 5 million ounce endowment across the 4 kilometers of strike here, and we've barely scratched the surface. So we have some very interesting exploration coming up that's very clearly demonstrating the vertical continuity of this, and we really believe here the trajectory is toward a 10 million ounce deposit. And so if the combination of those two projects, advanced stage, well understood resources, it's a pretty unique investment opportunity, I think, from a risk-reward perspective. Encourage you to get in touch with us. There's lots of information on our website, www.firstmininggold.com, or come and find us around at the balance of the conference here. We look forward to being in touch. Thank you very much.
Fantastic.
Thanks, Guy.